I've got so many questions on how do I actually do my analysis on Forex market, and this is very easy. That is why I choose to come right here and show you the right strategy that you can use that will actually give you profitable results. Now basically you can use this analysis, you can use this strategy for any pair, but I'll be using gold pair as a case study, and that is XAUUSD. Basically what you can see on my screen, that is these lines are part of my strategy, but I'll go ahead and remove all the drawings right on my screen. Now the first thing we're going to be doing is I'm going to be showing you exactly how the strategy works, and I will take you back to backtest, and that way you can understand how it works properly when you've also make your own practice. So make sure you go to your time frame and make your time frame to be on 4 hours time frame. Now the main purpose of making this be on 4 hours time frame is for us to mark out our key point. We have a key point in this strategy, and we can only mark that out on 4 hours time frame. I hope you understand that. Now basically you mark out the key points of today's market to analyze tomorrow's market. So if you're in the market today and you want to know what's going to happen in the market today, you need to mark out the key points of the previous day market. So what is the key point? Now this key point is the same thing most people must have been calling the support and resistance level, but logically you need to understand that if you're in the Forex market, you need to know that the market is actually chasing liquidity. It is either chasing the buy side liquidity or the sell side liquidity. So when it chases the buy side liquidity, that's what you guys call the resistance level, and when it chases the sell side liquidity, that's what you guys call the support level. Anyway, that's by the way. Right now we're going to be pointing out our key point, and that is very pretty easy. Okay, now today that I'm doing this video is 21st 3rd March. Now 21st is gonna end by this candle right here, this bearish candle that we have right here. That's where 21 start from. As you can see, the date is down there beside the trading view. Now today was 21st, and then we're gonna mark out the liquidity for 20th. The liquidity for 20th is gonna be our key point for 21st. Now how do you mark out this key point? That is the big question. Logically you need to check those candles that the wick are yet to be retraced. Now let's come back to where 20th start from. 20th start from this candle right here. I will just have to zoom this candle properly so that you can understand what I'm talking about. Now check the dates. 20th starts from this candle right here. So the candle have a upside liquidity, and this candle did not actually take out the up liquidity, right? But this candle took out the down liquidity. Now we're much concerned about this liquidity right here, so you can just go ahead and tap out this liquidity points. So that's going to be a key point. Okay, now move to the next candle. Okay, so the next candle also have a liquidity at the top and also have a liquidity below. The upside liquidity is yet to be taken out, but the downside liquidity is taken out, so we don't care about the downside. We are marking out the upside. Now move to the next candle, which is this bearish candle right here. Now watch out, the upside liquidity was taken out by this green candle, but the downside liquidity is yet to be taken out. We are also grabbing that, so we're still on 20th of March. Okay, now look at this candle right here, the next bullish candle, which is this candle. The downside liquidity is yet to be taken out. That means the next candle did not come down, so it went all the way up. So the upside liquidity has been taken out. Now the downside is yet to be taken out. Now logically looking at this bullish candle right here that just gave out the last liquidity, it has taken out this liquidity, so we are deleting that line. It has also taken out this liquidity, we are taking that line. So logically any of those key points that your candle comes to cross across, definitely the liquidity has been taken out, so we don't so much care about it. Now we don't care about these liquidities because they have been taken out. Now we are moving straight to the next candle, which is this bullish candle. The downside liquidity wasn't taken out, but the upside liquidity was taken out by this next bullish candle, so we don't care about the upside. Now the downside liquidity of this candle is yet to be taken out up to date, and it's still 20th. So you mark out the downside, and the upside is also yet to be taken out. You mark out the upside, and that still remains 20th until this bullish candle that shows us 21st. Now these points that we've marked out are definitely our key points. Okay, those are the key points we need. Those are the liquidity of the previous day that are yet to be taken out. So logically, what you want to do is you go straight to your 5 minutes time frame, and you check when the market is having some kind of momentum. Now throughout today, we actually do not have a valid momentum. Okay, so we're not going to say much about this. Now logically, what you want to be waiting for is you want to wait for this markets to either cross above or cross below. If it crosses below this key point right here, it definitely means that you want to sell up to this liquidity to take out this liquidity. And if it crosses above, you want to wait for a retracement back to this line, and we target liquidity of previous days that are yet to be taken out. All right, that's beautiful. So how do we implement this? Let's go back and have some back test. So I'll just go ahead and remove all the drawings that I have here. Go back to my 4 hours time frame, as you already know. We just gotta wait for the network to load properly. All right, I got to refresh now. Reload. All right, beautiful. And now we are straight to the 4 hours time frame to back test our strategy. All right, so remember, we're going to be targeting the liquidity of the previous day. I just showed you how to mark out liquidity. So let's check randomly. We're going to check 14th against 15th, right? So I'll just go ahead and zoom these candles so that we're going to check. We want to check what's going to happen on 15th, which 15th starts from this bullish candle right here, and 14th starts from this candle right here. Now let's target out the liquidity. The top liquidity is yet to be taken out here. This is also yet to be taken out. That is on 14th. And this was also yet to be taken out on 14th. I believe 14th ends here. So it was also yet to be taken out here. Also yet to be taken out here. And we have it down here, yet to be taken out. Yet to be taken out. Then lastly, yet to be taken out here. All right, so do not panic. If you do not understand how I grab out these key points, feel free to watch this video one more time. Watch from the beginning so that you can really understand how I mark out my liquidity. And if you're really finding this video interesting, consider hitting on the subscribe button and click on the notification bell. That way you can get notified whenever I drop new videos. And you can use the comment section to ask me questions. Now we go straight. Okay, before we go straight to 5 minutes time frame, we want to make sure that we target out where 15 start from. Okay, so 15 starts from this candle right here. So I'm targeting this spot. Now I'm going straight to 5 minutes time frame, and I want to see that blue line that I drew. All right, beautiful. So 15 stands all this way, starts from here, right here. So when the market opened, we kept watching when the market opened. Okay, and we're having a lot of key points here that could actually cause a lot of confusion. Right now, the market start from this level. It's this spot. I got to zoom so that you can understand what I'm saying better. Okay, now markets open here, then it's this spot and have a retracement back to the upside. Right, you wait for it to break up to this level, then you're targeting this spot as your take profit. Okay, now you also wait for it to come back, break down up to this level. You're targeting this spot as your take profit and having a stop loss a little bit above. Now this is stop loss, but this gives you profit. That's beautiful. It went all the way back again. You have a buy to the upside, targeting this spot. All right, so that is if you want to scalp. All right, if you want to scalp, that's what you should do. But logically, we have a lot of key points, and that could cause some kind of confusion to you, right? markets opened during the UK session at this spot. All right, it opens at this spot right here. So you want to see what happens when market open at this spot where you can see my mouse. You want to see what's going to happen. Is it going to break through the upside so you can have a buy, or have a retracement back to the downside? So fortunately enough, it retraced back to the downside. That gives you a very good reason why you should go for a short from here, considering this stop as a stop loss and targeting up to the last key point as your take profit. You can see it's reached. If you look at every of this key point, it has a reaction been done on those key points, and that's going to be a very beautiful profit for you. That was for the UK session. Now the US session started from this spot right here. Now you want to see what's going to happen. You want to really see a good momentum, right? So it started all the way from this spot, and I told you you have to forget about these key points because they are just too close to each other, and that's not going to give you a good view of what you want to see. I have to go back. Yeah, it's not going to give you a good view of what you want to see, right? So you have to forget about it and wait to see a break of structure down to the downside like this, something like this. It is going to this last one, so you want to target for a short from here, considering this key point as your stop loss. Then you can have here as your first take profit, then go as much as you want to go. You can see that was a beautiful operation, right? So you can go as far as testing the strategy. Just make sure you have a beautiful trade. If you have a good trade during the UK session, I would advise you to hold that as a profit for the day. But if you have a bad UK session, you can target for the US session, and that's going to be a profit for you. You should know and learn that too much trades is going to end your day in loss. Logically, when the UK session give you a good profit, what you want to do is close the trade. That's all for the day. But if it goes against you, you have opportunity to check for the US session. So I want you to go ahead and test this strategy as much as you can. If you do not understand any part, watch and watch again. I'm very sure you will understand how this works if you watch and rewatch. Thank you, and considering giving this video a thumb up, subscribe to my channel, and use the comment section to ask me a question. Thank you.